Joining in is Tarak Patel, who is the Managing Director at GMM Pfaudler. Tarak, thanks so much for taking time out. Revenues have grown by about 52%, which segment led the growth and what is the outlook when it comes to FY23?
Yeah, so this year was all about our stabilizing the international business. As you know, we did this acquisition of the Pfaudler international business maybe a year and a half ago. So the idea was to really stabilize the business, which we have done. Not so long ago, we were about a 600 crore company. Today, we are about 2,541 crores of revenue. So there's been a significant change in size and scale. The growth outlook looks positive. The industries that we normally cater to, chemical and pharmaceutical, continue to invest both in India and internationally. Our order backlog as the end of March is 30% higher than what it was last year. So there's a significant improvement there. Most of our facilities have a backlog of 6 to 8 months, India a bit longer. So all in all, we are quite positive. Once these commodity prices start cooling off, we will see an improvement in profitability as well.
Your operational numbers and margins have been impacted due to rising costs. With the current cool-off that we've seen in commodities, do you expect margins to rise over the next few quarters?
Yeah, so there's usually a lag because the job that we are pretty much executing now, we've already bought the material for. But definitely, I think Q2, Q3 onwards, if these prices continue to reduce, you will see an improvement in profitability. We are also looking internally to see if we have any excess costs that we can then reduce. So we're trying to look at operational excellence, the economies of scale, better the procurement, new vendors, value engineering, so that we can try and control as much cost as we can in-house. But definitely, as prices reduce, both here in India and internationally, you will see an impact on profitability.
Now, the current order backlog situation, if you can get into that, how are the demand from clients panning out? Are you tracking the client confidence? Also, what is it looking like? What kind of market share changes are being expected?
So we are the market leader across the world. In India, we have a market share in excess of 50%. And globally, I would say we are around the 40% mark. Glassline still is the biggest part of our business and will continue to remain the biggest part of our business. What we're seeing in India is investments in chemicals and agrochemical plants. We are definitely seeing a lot of growth from this area. Pharmaceuticals has been a little slow, but we believe now with the new PLI scheme that has come in, there will be investment in pharma as well. So I think the outlook remains positive. Like I said, we have good amount of backlog, so that gives us some breathing room. But over the next few quarters, when the economic environment improves, I do see investment also picking up.
What about the shipments from China because of the lockdown? How did that impact business?
Business has grown by more than 20%, which is phenomenal. I mean, when we acquired this company, it was about 175 million. Today, we closed around $230 million. So significant improvement in international business. The China business has also done quite well. However, the last maybe month or so, we've seen shipments being affected because of the lockdown. These equipment are ready to be shipped. So maybe in the next quarter, we'll have a little bit of an uptick when it comes to shipment. As soon as China opens up, these equipment will then leave the factory.
Right. Could you also update us on the progress of intervention plans for the services and the systems business?
Right. So I think from an integration standpoint, both these businesses are very important to us. Services makes up about 40% of the revenue internationally. In India, it's only about 10%. So we want to grow that business. It's a very profitable part of our business. We definitely want to grow that part of the business. As our install base keeps increasing, I'm sure that our aftermarket and services business will also continue. On an integration front, there are multiple areas that we are working on. There is low-cost sourcing that's happening. So we are selling Indian-made equipment to the Americas, to Europe, to Southeast Asia. So some of the Pfaudler facilities are also buying components from us. We have brought some technologies back into the Indian shores as well. So there's a cross-selling opportunity, there's low-cost sourcing. So all these integration efforts are now running at full steam.
Sure. So tell me a little bit about your capex program that you've outlined for yourself for FY23.
Sure. So we have a new furnace in Hyderabad that just came online a few days ago. So that's definitely adding capacity and it will help us cater to the Hyderabad and Vizag market. We are in the process of adding one more furnace in our plant here in the Gujarat as well. It's a large furnace, will also enhance capacity. We commissioned a new furnace in Brazil a few months ago. That's going to be used to cater to the US market as well. And in the US as well, we are adding one new furnace. So we are definitely investing. Pfaudler has not had much investment over the last few years, but now it's time to kind of grow the business, gain market share, and that's why we are adding capacity across geographies. And as you know, our the Vatva facility here in Ahmedabad is fully up and running, and that will add the capacity in the heavy engineering space as well.
Tarak, thanks much for taking time out and joining in.